Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Monday, February 11th. Hope everybody had a great weekend, and for those of you who are out in the East Coast, hope everybody weathered the storm okay. Friday, we had another up day. The pattern continues, grinding higher to the upside. Very, very low volume on Friday. And I think that's possibly due for, obviously, the storm in the Northeast. A lot of people, a lot of traders did not come in. So when you have a light volume day, markets favor the upside. Now, we did have a couple of economic indicators and some data come out that was positive, and that also helped fuel a little bit of the gains on Friday. Dow was up 48, S&P up 8, NASDAQ up 28. Nothing really has changed except that now we're at the upper end of the range again. As you can see here, just briefly on a 5-minute chart of the spiders, there was nothing really to do unless you caught some sort of a new stock, something that was downgraded to look to get short, or if you caught something that you were already long in. This is not volatility. Look at this. We popped up and we stayed there all day. Literally, the first 15 minutes was the only trading, and usually, the first 15 minutes, a lot of people, we just wait, we sit out and see where the market is going to be headed. And as you can see here, we did nothing all day on Friday. And I think that's partly due, again, for the storm. A lot of people did not go into work on Friday, maybe traded from home a little bit, and that produced a slow grind higher. And that's what usually happens. Now, Monday this week is as options expiration. The markets generally favor the market to the upside. And for that, I mean, usually Monday, Tuesday, you have a decent day, up day, and then you have Wednesday comes in, maybe a little sluggish Thursday, and then Friday, again, positive move to the upside, slow grind, nothing going on type thing. I think we're going to end up having this probably to the end of February until the Federal Reserve starts talking about the debt ceiling again, which I think is March 1st, and I think that might put some kind of a damper on this slow grind rally. Now, we've been up 6 weeks in a row. 6 weeks. That's a lot. That's an astounding feat, and I tell you, I just can't imagine the market continues to grind higher like this. Now, for those of you who are long-term investors, I just sit tight and do nothing. I would not be adding positions right now at these levels. For swing traders, if you still have the position, tighten up your stops, maybe buy a little protection. There is no volatility. The puts are very, very cheap, and it's something to consider. For the day traders, it's going to be a little bit harder. I know many professional traders that are very quiet. I mean, literally not doing too much, and that's fine because you have to gauge your type of risk, and markets are just either grinding higher, and a lot of stocks aren't. Some of these stocks aren't even moving, and then some of them are moving 20, 30, 40% in 2-3 days. I mean, it's impossible or anything logical to get long at those levels. So pick the right spots, pick the right stocks, and the right setups, and just weather the storm here until the markets actually start to give in a little bit. But anyway, look at this chart. Really, it's just a shame that this is no trading at all on Friday. But for professional traders, you have to identify that and say, okay, nothing really going on. Let me just back off a little bit and wait for the next setup and or the next day. All right, so let's go run into these indicators. Nothing has changed, guys, and I hate to say it, I'm sorry about that, but there's really no change. We're +3 here in a NIMO, again, telling us that we get plenty of room to run to the upside, plenty of room to run for the downside, so we're basically right here in neutral territory. Stocks above the 50-day moving average ticked a little bit lower, but still way overbought. And again, that's why I keep saying overbought is not a sell signal. We can be overbought for months. And this is something that is concerning, that a lot of people are not concerned that we are way above these lofty levels. And again, as long as the Federal Reserve continues to accommodate $84 billion in asset purchases, that where the money's going is going into the U.S. Equities, and that's exactly what's happening. Until that stops, this market's probably going to grind higher, unless there is some sort of a catalyst to say, okay, why? What's the reason to continue to buy this market? Okay. We have our NASDAQ record high index. We've been literally overbought since January the 2nd, and we continue to stay overbought here, so there's no change in that indicator. Now, the NASI, we are at record levels, as you can see here, the NASDAQ Summation Index. So watch for some sort of a reversal here, maybe a little pullback and a break lower on our moving average. But as of right now, again, still on a buy signal. And NASI Weekly, as you can see here, we are looking to try to break down here, but still on a buy signal from way back when in November. So this is still telling us that we have further upside to go. And again, we'll look at this at the end of the week. Bullish percent. We did get a break lower, and what happened? We hit the moving average, and now started to curl up again. So that is also still on a buy signal. Okay, now let's take a look at the VIX real quick. VIX losing its luster again. Like I said, we popped up here. This really didn't get me too excited. I want to see us really start to break above 17 and really get some fear in. And of course, that did not happen, and we just started to roll back over. Take a look at the dollar. Now, I mentioned about the dollar. I said, look, we have a head and shoulders pattern, daily and weekly chart here. If we break below 79, now I hear a lot of traders and market participants and the pundits on CNBC start talking about a head and shoulders on the dollar. More than likely, that's not going to happen anymore. When I first brought it to your attention, it was weeks and weeks ago. I thought maybe that might happen. That's not going to happen now. Now, the dollar right now is inversely correlated. We have the dollar up, market down, commodities down. That might not happen anymore. That actually might rally. It hasn't happened as of yet, but if the dollar starts to really pick up steam, you probably will get a reaction to markets to start to sell off, and maybe that might be something to really get us going to the downside. But eventually, the dollar will rally with the economy. The economy is doing better. We see it on our manufacturing numbers. Initial jobless claims are starting to pick up a little bit. So the economy is doing better. But what that also means is that the Fed eventually is going to have to start pulling in the reins on free money. And when that does happen, I would say the markets will really start to sell off. And the reason why is we're up here because of the Federal Reserve buying our economy, buying our markets here, flooding the market with liquidity. And that's the only reason why we're really up here. Even though the market is getting better, we shouldn't be at these lofty levels, hitting 2007 highs and actually almost getting to all-time highs of 1575. Okay, here's the S&P Spiders monthly chart. As you can see here, looks like we're headed that way. I mentioned this every week. I show this to you. 156. We only got about $5.20 before we hit it. I do think that once we hit it, we should get a little bit of a pullback. How deep, no one knows, but we should get some sort. But look at the volume on the monthly chart. Now this just started, but the volume here has really just been consistent. Really have no volume up until here when we really started to break out in November. And then we just dropped off again. So, again, it looks like the overall target will be the all-time highs of 1575. Okay, now, here's the Spider Weekly chart. We're breaking out of this trend line. As you can see here, there's sort of this wedge pattern, and we are right on it. If not, we did break out by a couple of pennies. Volume was better during last week, but again, look at it. We are overbought here on our weekly charts. So that's something that we're going to keep an eye on for next week. Daily chart, we had this horizontal consolidation, and we did break out of it on Friday. Remember, it's very, very low volume, but we did break out of it. We'll see what happens really this week, today, tomorrow, if we start to break out a little bit higher. But it looks like to me that 1525, 1530 is going to be the next target to the upside in the S&P cash. But again, we did break out of it. Now we're starting to get into really no resistance up above. And here's the 60-minute chart. As you can see, we have a gap up. This area here is still going to need to 149.85, really 14.95 in the S&P cash. And as you can see, what happened on this is an hourly chart. We broke up. We literally stayed in a range, 2-point range all day, and that's just total nonsense how markets just stay there. Now, with literally no trading was to be found on Friday, unless again something ran by you by some sort of an upgrade and downgrade. You caught something, intraday. S&P weekly, same thing here, guys. We broke back above it. Nice ascending triangle on a weekly chart, and we continue just to move higher. So it looks like 1525, 1530 will be the next target. And look at the indicators, extremely overbought. RSI not as overbought, so that means that it's still a little bit more room to run here. Here's the daily chart. Look at what's happening here with our CCI. lack of momentum to the upside. But again, market continues to grind higher. Price is what pays us. Our indicators are secondary to price. Please keep that in mind. All right, but look what's happening. Big move up. We are breaking out here on the daily chart. And it, oh, excuse me. Here's our 60-minute chart of the S&P, and this here, as you can see here, we're just sitting at this level, grinding higher, and now we are at the lower end of that range, and we're just just below that. Again, target I'm looking for is going to be 1470, 1460. Again, in this area right here, right around the S3 area, if the market decides to pull back. Remember now, if the market decides to pull back, we had our indicators starting to roll over, and now we broke back out again. So we'll just we'll just see what happens today, tomorrow, and then we'll readjust our lines here. Okay, and S&P 30-minute chart, we had a double top here. That bearish rising wedge played out for 2 days, very small, ever so slightly, and then now we broke back above the double top. So I'll be removing this today for tomorrow. And as you can see here, guys, basically in a range, and now we jumped up and we're in a range again from Friday. Okay, now the IYT, which is the leader here. This is our leader of the 5 indices that we follow. We are now attacking the high of 105.57. There is no resistance back above here. A break above here, it continues to run higher. So looking really good in the transports, I must tell you. There's nothing really bad to say about it. Diamonds as well. We're back into this upper end of this lower trend line. So Dow actually regained its momentum. But we are overbought here, as you can see here. So again, I know I sound like a broken record, but we have to continue to monitor what happens here. Let's take a look at the Russell. Again, all-time highs, uncharted territory, and now we broke back down and we broke back above it. So our sell signal is still down below here, last Thursday's low, 88.59, and then of course the 20 is just a little bit above it, but we really need to monitor what happens with the Russell. But Russell gaining a little bit back, gaining some momentum back. And remember, Russell lagged on Thursday, the rest of the indices. But again, one day doesn't make a trend, so we just want to be nimble and be ready for anything to happen in the markets. Now, Apple, we talked about Apple. I mentioned on Thursday that we had David Einhorn from one of the fund managers sort of suing, if you will, the Apple board to relinquish some of that $1.3 billion in cash that they have, they're hoarding. And then Apple made a statement on Friday, and then that also gave a little jump to Apple. Now, we are above. We just got into that lower trend line, which I like, and we did retrace back 50% of it. Let's see what kind of move does it have. Does it get back to 500, or does the market start to roll back over again? Now, this is a weekly chart, okay? But this is definitely a good sign here. But again, this is just right now a trading stock. I would only look to trade this, swing trade it for a day, 2 days, 3 days, if you can get a good entry. But I think ultimately the market, I think Apple will go lower one more time. And that's the time when you really want to start to buy in the stock. Right now, it's just hearsay and it's talk. Tomorrow is the Goldman Sachs Tech Conference. If, in fact, they announce something really good and positive, then I think Apple will have some sort of positive catalyst to regain momentum and start moving higher. And then maybe you want to start to nibble in it. But as of right now, it's just a little bit of talk. They did announce something. Oh, we're thinking about it, but let's just see what happens. There's just the daily chart of Apple. As you can see, we just flagged back into the 20-day moving average. So as of right now, I had a good 4-day run. Let's see what happens this week. This will be a good telltale sign, especially tomorrow in the Goldman Sachs conference. And again, here Q's broke out a range, looking pretty good here. If we get another move higher and we can maybe back test this range, make a higher low from this area here, and then start to move higher, then I think you can start buying some tech again. Okay? Right, guys, really, that's about it. Sorry about the lack of information, but nothing's really has changed. Just be nimble here, be aware, and be alert on anything, because anything can happen in these markets. Have a great day, and we'll talk to you tomorrow.